Refinancing can be a great option for homeowners, and that's what we're going to talk about today. I've got in front of me a list of what I call the top 10 reasons to refinance your home. Number one, lower your interest rate. So if you bought a house in the last 12 months, you bought it in a time when interest rates were at the highest that they have been in a very long time. Rates have come down some, although they're fluctuating just like they always do. It may be an advantageous time for you to take advantage of refinancing, if not for anything, but to lower your interest rate. So that's number one. Number two, monthly payment reduction. Of course, as your interest rate drops, your monthly payment's going to drop. So it's another great reason to refinance. Cash out for home improvements. So tap into your home's equity and make those improvements that you've been putting off. And you know, those home improvements that you make are going to give you even more equity. Some of them can result in a lot more equity in your house, and it's a great reason to refinance. Debt consolidation. You know, I've talked about in previous videos how Americans have run up trillions of dollars of credit card debt, and they are defaulting at a rate higher than we've ever seen. It's around 50%, and that's not good. That's not good for your finances. So, you know, consolidate those debts, those high rate credit cards, roll them into a mortgage payment where your interest rate's going to be much lower than the average credit card rate, and help give yourself some breathing room and help pay off those credit cards before they get to the point where they're not manageable anymore. Number five, adjust your loan terms. So you may be in a position where you took a 30-year loan last year and things have changed for you for the better, and you feel like you could make a 15-year payment. So it might be a good time to look at a 15-year mortgage. Your payment's going to go up, but the amount of time it's going to take you to pay off the house goes down, and you're going to build equity even faster on a 15-year mortgage. You're going to save yourself thousands of dollars over the life of the loan. And then there is number six, eliminate private mortgage insurance. So if you bought your house and you weren't able to put 20% down, then you're paying private mortgage insurance, or what's called PMI. And that could be a small amount, like $30, $40 a month. For some people, that amount could be $200, $300, $400 a month. So since you've bought your house, you may be surprised at how much equity your house has now, and it might be a good time to look at refinancing to get rid of that mortgage insurance payment. Number seven, financial goals alignment. So refinancing can align the mortgage with your current financial goals. You know, if you're just looking to save money, invest in home improvements, pay off the mortgage sooner, or just use that money somewhere else that's going to benefit you greater than it would be just sitting in your home's equity. Number eight, stabilizing adjustable rate mortgages. So if you've got an adjustable rate mortgage and the rate fluctuates up and down, maybe a good time to look at refinancing so that you've got a fixed interest rate and you know month after month what that payment's going to be. Number nine, enhancing your credit score. So refinancing, paying off other debts with that, maybe taking some cash out, that's going to help you improve your credit score. So if you've had some credit score challenges in the past, tapping into your home's equity to pay off debt that you already have is going to, over a term of months or even years, it's going to equal a better credit score, and you're going to be more lendable in the future. And finally, number 10, take advantage of equity growth. So again, we're talking about your home's equity. You can take that money and you can use that value that's in your home to leverage that money to meet other financial goals you might have. Maybe you've got kids that are going into college and you need to be able to pay for that tuition. While home equity loan can be a great way to do that, or just a cash out refinance might be even a better way of doing it. Any way you want to do it, anything questions you have about this, please let me know. My contact information is at the end of this video. We would love to help you, and that is the facts. Have a great day, everybody, and God bless.
That ain't working. That's the way you do it. You play the guitar on the MTV.